You formed an LLC. Congratulations. But you're not done. Not even close. If you stop at the filing and don't handle what comes next, you could end up paying thousands more in taxes than you owe, lose the liability protection that you started this whole thing to get, and wreck your business credit before it ever gets off the ground. I've seen it happen over and over. Business owners who did the hard part, got their LLC approved, and then assumed everything was set. However, it isn't. There are 7 things you need to take care of right now, and I'm going to walk you through every single one of them. I'm Carson Vaith with Flat Rate Bookkeeping, and I work with LLC owners every single day. I've watched brand new business owners walk into avoidable problems, tax penalties, credit denials, and even losing their legal protections, all because they didn't complete a few basic steps after formation. So let me save you the headache. Here are 7 things you need to do immediately after getting your LLC. Number 1, apply for your EIN. Your employer identification number is basically your social security number for your business. The IRS uses it to identify your LLC for tax purposes, and you'll need it for almost everything: opening a bank account, hiring employees, filing taxes. The good news is it's completely free. You apply directly on the IRS website and it takes under 10 minutes. Do not pay a third-party service to do this for you. They'll charge you $50 to $100 for something that the government gives you for free. The key thing is that getting your EIN creates the formal separation between you and your business. That separation is the whole point of an LLC. Without it, you're just a sole proprietor with extra paperwork, and you risk losing the very protection you sought. Number 2, get a DUNS number, DUNS. A DUNS number comes from Dun & Bradstreet, and it's how you start building business credit, separate from your personal credit. Lenders, suppliers, and even some landlords use this number to check your business creditworthiness. Without one, your LLC is essentially invisible to the credit world. You can set one up for free on Dun & Bradstreet's website. Do it early because business credit takes time to build. The sooner you have a DUNS number, the sooner your LLC starts generating its own credit history. This future-proofs your business, making it easier to secure loans, better terms with vendors, and leasing opportunities down the line. Number 3, make your tax election. This one trips up a lot of people and can be the most costly mistake. When you form an LLC, the IRS defaults you to what's called a disregarded entity. This means your business income flows through your personal tax return. That sounds simple enough, but here's the problem. You also get hit with a 15.3% self-employment tax on top of your regular income tax for the privilege. That's a significant unnecessary chunk. You have a 75-day window from the formation of your LLC to elect a different tax classification by filing Form 2553. You can elect to be taxed as an S Corp, a C Corp, or even a partnership. The S Corp election, for example, can help eliminate the self-employment tax on a portion of your profits by splitting your income into a reasonable salary and distributions. Miss this 75-day window and you're locked into the default classification for the entire tax year. Most new LLC owners don't even know the deadline exists until it's too late. Number 4, open a dedicated business bank account. This is non-negotiable. You need a separate checking account, ideally a separate savings account, and, if you can, a business credit card, all in the name of your LLC. Do not use your personal account for business transactions. Here's why. One of the main protections of an LLC is limited liability. If someone sues your business or the IRS audits you, your personal assets should be shielded. But if you're mixing personal and business money, a court or the IRS can pierce the corporate veil. This means they can treat your LLC as if it doesn't exist and can go after your personal assets like your house or car. Separate accounts protect that legal wall between you and the business. It can also make your accounting infinitely cleaner. Number 5, reimburse yourself for startup expenses. Before your LLC had its own bank account, you probably paid for some things out of pocket. Filing fees, legal costs, insurance, maybe software or equipment. That's normal, but you need to formally reimburse yourself from the business and document it properly. If you don't, those expenses become invisible to the IRS and you lose the tax deductions you're entitled to. Create a simple document listing the expenses, attach the receipts, and write yourself a reimbursement check from the business account. This keeps your financial trail clean and ensures your business captures every legitimate deduction from the start. Number 6, set up a bookkeeping system. I cannot stress this enough. If you don't have a system for tracking income and expenses from day one, you're flying blind. You won't know if you're profitable, you won't catch mistakes, and when tax time comes, you're scrambling to reconstruct a year's worth of financial data. I recommend a cloud-based software like QuickBooks Online to most of my clients. It connects your bank accounts, categorizes transactions, and gives you a real-time picture picture of where your business stands. The IRS itself recommends that every business maintain a reliable system for tracking deductible expenses. This isn't just about tax, it's about having the data to make smart decisions and ensuring your business can survive. Number 7, plan and budget for taxes. When you work for someone else, taxes get withheld from every paycheck. When you own an LLC, nobody is doing that for you. You are responsible for setting money aside and making estimate tax payments to the IRS quarterly. A general rule is to set aside about 30% of your income for taxes. If you earn $50,000 this year, you should have roughly $15,000 earmarked. If you don't plan for this, you'll get hit with a massive, unexpected tax bill that you can't pay. Then the IRS adds penalties and interest, and those compound fast. I've personally seen them shut down businesses that were otherwise healthy and growing. I see it all the time. Someone gets their LLC, feels great about it, and then doesn't touch the administrative side for months. By the time they've come to me, they've overpaid on taxes, mixed their accounts, and have no documentation for deductions. The LLC formation itself is the easy part. The follow-through is where most people drop the ball, and it's where the real consequences live. My goal is to make sure you don't become one of those cautionary tales. Each of these 7 steps is simple on its own. None of them require extensive consultants or legal teams, but together they form the foundation of what makes your LLC actually work. The tax savings, the liability protection, the credit, the clean financial records. Skip any one of them and you're leaving yourself exposed to risks that can sink your business before it finds its footing. If you're not sure where to start, or you've already let some of these slip, don't panic. I'm offering a free 15-minute tax entity assessment for new LLC owners. You can book a consultation with my team directly through the link in the description below. We can review your situation and help you get back on track. If this is helpful, subscribe to the channel. I break down the financial and administrative side of running an LLC so you don't have to figure it out alone.